Money is the lifeblood of society, and it's been around in one form or another for thousands of years. If you want to find out how money has evolved over time and how it actually works, then this video will be incredibly eye-opening. Welcome to Simply Economics. Before we proceed to another incredible content, make sure to subscribe to this channel first and hit the notification bell. This video takes you on a journey through history, exploring the evolution of money from barter to modern cryptocurrencies. Discover the various forms of money, their changes, their value, and more. Let's dive in. What is money? Surprisingly, money often lacks intrinsic value. Instead, it serves as a medium of exchange, with a value assigned to facilitate trade of goods and services. While certain forms of money, like metal coins, possess tangible value due to their material composition, paper money prevails in the modern world, yet holds little intrinsic worth. Throughout the course of monetary evolution, currency has assumed various forms. When was money invented? Before money, people relied on bartering to exchange goods and services. Around 5,000 years ago, the Mesopotamian civilization introduced the shekel as the earliest form of currency. Gold and silver coins can be traced back to 650 to 600 BC, when stamped coins were used to compensate armies. There is evidence suggesting that metal coins may have existed as early as 1250 BC. History of bartering. The practice of bartering has a rich history that dates back to 6000 BC. Mesopotamian tribes introduced this concept to the Phoenicians, where goods were exchanged in lieu of currency. Items such as tea, salt, weapons, and food served as mediums of trade. Throughout time, bartering has evolved. Colonial Americans engaged in the trade of pelts, crops, and muskets, further shaping this ancient practice. Invention of the first metal money. Dating back to 1000 BC in China, the origins of metal money can be traced. These early coins were crafted from valuable metals like bronze and copper, bearing intricate stamps. The concept of coins also emerged among the ancient Greeks around 650 BC. Over time, coins shifted to silver and gold, becoming the currency we use today. They played a pivotal role in the history of money by introducing payment based on count rather than weight. This breakthrough enabled convenient transactions by tallying the number of coins exchanged. Early coins. Throughout history, different regions have used various coins. Around 500 BC, round coins with imprints of gods and emperors emerged, ensuring their authenticity. In 800 AD, Charlemagne introduced the silver penny, which dominated currency in Western Europe from 794 to 1200 AD. During the mid-13th century, the shilling and pound became common terms for larger quantities of pennies. The evolution of currency value led to the development of larger denominations, shaping the captivating narrative of money. Transition to paper currency. Although paper money was initially developed in China around 700 to 800 AD, it took considerable time for it to become widely adopted. According to Britannica.com, China was the first country to implement paper currency, but its usage ceased around 1455. The introduction of lightweight paper money facilitated international trade, which presented both challenges, such as distrust and currency conflicts, and opportunities, such as the ability to engage in commerce in new regions and acquire novel goods. The introduction of banks. The Roman Empire introduced banks around 1800 BC, providing loans and accepting deposits. These banks vanished with the empire's collapse. In the 19th century, banks gained respect in communities and adopted fractional reserve banking. Realizing they could lend more money than they had, banks marked a significant milestone in the history of money. The Bank of the United States, established in 1791, was the first U.S. bank. The gold standard. In 1816, England adopted the gold standard, where banknotes represented a specific amount of gold. This provided stability and value to the previously unbacked currency. The United States followed suit with the Gold Standard Act in 1900. However, the gold standard ended in the 1930s due to the Depression and the devaluation of gold, leading to the establishment of the central bank that plays a vital role in the economy today. Credit cards. Credit has a long history, but the first universal credit card wasn't introduced until 1950, when Ralph Schneider and Frank McNamara founded the Diners Club. Other cards followed, and in 1959, American Express introduced a plastic card. IBM introduced the magnetic stripe on credit cards in the 1960s to store account information. In the 1990s, cards started having embedded chips to encrypt information, enhancing security. Digital currency. In the 90s, digital currency faced failure, but in the 2000s, it gained popularity and widespread use. Today, cryptocurrencies and virtual currencies play a crucial role in the economy, with billions of dollars in digital money being transferred. Bitcoin was one of the first and largest digital currencies. It soon became the virtual currency standard. Remember, virtual currencies like Bitcoin are traded on exchanges and have no physical coinage. Money has evolved from bartering goods to coins, paper money, credit cards, and virtual currencies. It has been shaped by human progress and technology, making transactions easier, faster, and more secure. This paves the way for an increasingly digital global economy. Thanks for watching, guys. If you enjoyed this video, please make sure to give it a thumbs up and hit that subscribe button so you don't miss out on any of our future content. We truly appreciate your support. See you in the next one.